All right, you guys, this is day 3 with Dr. Chris Cole on the 722 project Trading Fundamentals. He is going to go over, I believe, candlesticks tonight. I'm not exactly sure. I think that's what our topic is for tonight, but I'm going to let Dr. Chris Cole take it over, you guys. He's an absolutely amazing teacher. This is the kind of teaching that you will receive being a part of the NFT project, the 722 NFT project, and the 1% trade room. All right, peace, family. I'm giving it over to Dr. Chris Cole.
All right. This is class number 3 of Trading Fundamentals. Okay. Tonight I'm going to be going over Candlestick Basics and time frames. Okay. If you're new to trading, all of this can be overwhelming. You're going to take one look at a chart and really have no idea what's going on. It looks like a foreign language. So we're going to demystify charting. We're going to make this super simple. I'm going to give you the only 3 chart patterns that you need to know. And we're also going to break down time frames and the importance of each of the time frames. All right, candlestick basics. Candlestick trading is one of the oldest trading concepts known for modern markets. While there are multiple uses of them, you only need to truly understand the basics and only 3 patterns in order to be extremely successful. Okay. In class number 2, I say one of the biggest lies or deceptions in trading are charts, because charts provide you with a left to right element to the market. Okay. And there is no left or right element to the market. The market only goes up or down. Okay. The market only travels up or down. So when we look at a candle, we either have a red candle or a green candle. Okay. Red candle or green candle. When you see a green candle, this indicates that the market has moved higher or the market has moved up. Okay. Now let's dissect this green candle here. When you see a green candle on your chart, the bottom of the body here is the opening price. Okay. The bottom of the body here is the opening price. The top of the body is the closing price. Okay. So if this was a 5-minute candle, okay, and when I say a 5-minute candle, I'm simply stating that this candle represents what? 5 minutes in time. Okay. So at the start of my 5-minute timer, price opened up here. And at the end of 5 minutes, price closed here. Okay. So we started here and we did what? Moved higher and closed higher. Okay. Your opening price is always at the base of the candle, and your close price is where? At the top of the body. Now here are your wicks. I have a wick above me and I have a wick below me. Okay. Now what does this mean? During this same 5-minute period, the market opened here. It traveled down here. It traveled back up to this point, and then eventually did what? Came back and closed here. Okay. Now, red candle. A red candle indicates a downward movement in price over a period of time. Again, if I was looking at a 5-minute chart. Okay. If it's a red candle, opening price is at the top. Closing price is at the bottom of the body. Okay. The market opened here during this 5-minute period of time. It then did what? Traveled up, traveled down, traveled back up, ultimately closing here. Okay, so these are the basics of reading a candle. This is all you need to know to understand price action when looking at a chart. Okay, this is all you need to know. Where is my closing price? Where is my opening price? How high did it travel? How high did price travel during this time period? And how low did price travel during this time period? Now, next. The only 3 patterns you'll ever need to know. Yesterday, class 2, or during class 2, I talked about liquidity, right? And I talked about becoming the hunter and not the hunted. Well, if I want to become the hunter and not the hunted, these are the only 3 patterns you ever need to know. Okay. Again, this is going to require you to unlearn everything that you think that you know about the market. I wish you can just forget it. Okay. If you want to be extremely successful in trading, these are the only 3 chart patterns or candlestick patterns that you'll ever need to know. Okay. These are the most popular signs of a reversal. Okay. We talked about 95% of retail traders consistently lose money. Their money is constantly being taken by the banks and the institutions. Well, guess what? These 3 chart patterns are what? The most popular chart patterns of what? The 95% of the retail traders. Okay. If I want to hunt their money, I need to do what? Be able to identify when and where they make a decision in the market. Well, guess what? These are the 3 most popular trading patterns of the retail trader. Okay. One is your doji. Okay. Your doji is simply indecision in the market. Okay. This typically signals a reversal. Okay. And this is true on every time frame. Okay. This is true on every time frame. The next is your double top, where the market has formed top number 1 and come and form top number 2. Okay. When you're 95% retail traders who consistently lose money, when they see this pattern in the market, they typically do what? Sell the market. This is a popular sign of a reversal. Okay. And the inverse is true. Your double bottom. Bottom number 1 and bottom number 2. And typically what? You see what? The market reverse and go higher. And on your double top, you see what? The market reverse and move lower. Okay. And look at this. What do we have here? We also have a doji. This is also a doji, showing you what? A sign of a reversal. If you want to be extremely successful at trading, I promise you, these are the only 3 patterns you'll ever need to know, period. Okay. These are the only 3 patterns you ever need to know. Why? Because we can now do what? Target the retail traders' money. Okay. We can now target the retail traders' money by understanding these 3 simple chart patterns. Now, let's talk about time frames. The time frames, these are the building blocks of your trade plan. Your time frames are the building blocks of your trade plan. Understanding what time frame you are functioning from is the most important part of building a trading plan that's equipped for high probability trades and carries a huge risk to reward profile. Ultimately, this is what stacks the odds hugely in your favor. I'm going to repeat that again. Ultimately, this is what stacks the odds hugely in your favor. Okay. The golden rule for time frames. You find your points of interest or POIs from your higher time frames, and you find your executions from the lower time frames. Okay. You find your points of interest or the areas you want to trade from on your higher time frames, and you find your executions from your lower time frames. All right. It's literally that simple, right? We know the banks and the institutions, what they control, move, and manipulate the market. Guess what? They're ultimately in control. The what? The longer we're in the market, the longer they're in the market. So your higher time frames are going to give you the best and the most accurate indication of what the banks and the institutions are doing. Okay. I want to find my areas of interest, my POIs on my larger time frames. I want to see where the market has been manipulated, how the market has moved on my larger time frames first. Okay. And when I actually want to execute a trade in the market, I want to execute it from my smaller time frames. Why do I want to execute it from my smaller time frame? I want to execute it from my smaller time frame simply because what? It gives me a lower risk profile. Okay. My 1 minute candle or my 5 minute candle is going to be what? A lot smaller than what? An hour candle or a 4-hour candle or a daily candle. Okay. So I want to operate. I want to find my points of interest or my areas I want to trade on my larger time frames, and I want to execute from my smaller time frames. All right, now, what time frame should I look at as a day trader? Okay, as a day trader. As a day trader, your most important time frame is going to be your daily time frame. Okay, as a day trader, your most important time frame is going to be your daily time frame. Why is this? Well, the banks and the institutions, right? Opening price on Friday and closing price on Friday is the exact same for your banks, your institutions, and your retail traders alike. Okay. We're talking about stacking the odds in our favor. Everybody can do what? Go back to the previous day and see where the market opened, see where the market closed, see how high it traded, and see how low it traded. Okay. Analyzing your daily time frame is the first step of putting the odds in your favor. Okay. Analyzing the daily time frame is the first step in placing the odds in your favor. Okay. Our higher time frames then move to what? Our 4-hour time frame and our 1-hour time frame. When I'm going through the charts, when I'm analyzing the markets, when I'm setting up my points of interest or areas in which I want to trade, I start with my daily, I then move to my 4-hour, and then I refine it down to my 1-hour time frame. Okay. Let's keep it simple. Where I place a trade always comes from my daily 4-hour or 1-hour time frame. Okay, according to my trading plan. Okay, these are my static levels or my static points of interest. Okay, these are my static levels or my static points of interest. So guess what? Before I came to the market and traded on Friday, I picked out my spots based off of my daily time frame, my 4-hour time frame, and my 1-hour time frame from Thursday. Okay. Now, when I want to execute a trade, I'm looking at my lower time frames. Okay. My lower time frames consist of my 15-minute, 5-minute, or 1 minute. Okay. So when I'm actually executing a trade or when I have my charts up and when I'm actively in the market, I'm typically only looking at maybe my 15-minute, my 5-minute, and most of the time, I'm just literally looking at my 1-minute time frame, okay? Because I've already marked my levels from what? My higher time frames. I've already marked my levels from my higher time frames. So when it's time for me to execute in the market, I simply wait for my lower time frames to do what? React from my higher time frame points of interest. Okay. I've already marked up my points of interest or areas I want to trade from off of my daily, my 4-hour, and my 1-hour. Right. And when it's time to execute, when it's time to get in the game, I want to do what? Be as close to the moment as possible. Okay. So I'm looking at my 15-minute, 5-minute, and majority of the time I'm executing from my 1-minute time frame. Okay. This gives me the lowest risk, the least amount of risk. Okay. I know what the market is doing on my larger time frames. I've already identified that. Right. Now, when the market gets to those significant levels or those major levels on the higher time frames, I zoom into my lower time frames to execute. Okay. Listen, it's literally that simple. Okay. And we're going to continue to break this down. Tomorrow, we're going to talk about day types and putting probabilities on your side. Okay. We went over Candlestick Basics. I gave you the only 3 chart patterns you'll ever need to know to be extremely successful. And we talked about the importance of time frames tonight. Tomorrow, we're going to build on this by me explaining the day types and how to put the probabilities on your side. We're going to continue to build on putting the probabilities on your side. Today, learning about the daily time frames and the larger time frames was step number 1. Tomorrow, we're going to dive into day types. Okay. Make sure you all tap into 722, us etching history onto the blockchain. Visit us at 722.io. Make sure you follow me on Twitter at Chris Cole I am, Instagram at Dr. Chris Cole I am. I appreciate you all. And listen, go watch this video as much as possible until this becomes second nature. This is very simple, very easy, and very straight to the point. Thank you, and I'll see you next class.
Thank you, bro. What a great class tonight. I hope you guys enjoyed the class tonight. Very simple, very straightforward. I hope you guys were able to journal, get that in. If you missed anything, feel free to go back to our YouTube channel and rewatch it. It will be on our YouTube channel for replay. Happy Friday. Peace and blessings.